Welcome to this deep dive into Forex trading's hidden engine. Today, we've gathered a stack of sources like broker white papers, liquidity provider specs, and, trader forums.
Yeah, a lot of technical reading for this one.
Definitely. And we're using all that to examine deposit and withdrawal mechanics. Our mission here is to show you why moving your money isn't just some administrative chore. It's actually vital risk management.
It really is. I mean, it dictates your entire ability to trade effectively.
Right. So, okay, let's unpack this. Having a great trading strategy but really slow funding, it's like putting a world-class driver in a race car with a clogged fuel hose. You are just going to miss the opportunity.
That's a perfect analogy because, when you're managing tight margins, the route you choose for your money dictates your actual market reaction time.
But wait, if speed is everything for a day trader, shouldn't everyone just blindly use crypto or, I don't know, credit cards? Like, why use anything else?
Well, what's fascinating here is that fast doesn't always equal best, right?
Mhm.
So you have traditional bank transfers, which are,
Painfully slow.
yeah, incredibly slow, but they offer unmatched stability for large volumes.
Okay, fair enough.
Then you've got credit cards. They are super fast for getting your money in, but they create these massive withdrawal bottlenecks later.
Oh, right. Because of the broker rules?
Exactly. And then people look at e-wallets thinking they're the perfect middle ground because they feel instant to the user.
But they hide fees, right?
Yeah, they hide these hefty conversion fees. You are paying a broker fee, sure, but the wallet provider applies a proprietary, much less favorable exchange rate.
Ah, so that spread is basically your hidden fee.
You hit the nail on the head. And then there's crypto, which completely bypasses those traditional banking barriers.
Which sounds great on paper.
It does. But you're trading fiat stability for network volatility. I mean, if you initiate a deposit and the blockchain gets congested, the asset's price could just plummet while you wait for the network to confirm it.
Wow, so by the time the transfer actually confirms, you could end up with significantly less usable margin in your account than you started with.
Exactly. It's incredibly dangerous if you aren't prepared for it.
So you really do have to pick your poison. But I imagine the real friction happens when you try to pull your money back out, right?
Oh, absolutely.
Hmm.
If we connect this to the bigger picture, extracting your profits is where traders just hit a brick wall, largely because of what we call the two clocks concept.
Two clocks, like two different timers.
Yeah, so when a withdrawal is slow from a broker, like say Monaxa, traders naturally blame the broker. But clock one, the broker's internal approval, is usually instantaneous.
Right, they approve it on their end right away.
Exactly. Clock two is the payment network's processing time. That's the sluggish part. The delay is almost always the traditional banking rail taking days to clear the transaction.
Which makes sense. And that brings us to that really frustrating stuck valve I saw in these broker docs, the return to source rule.
Ah, yes. People hate that one.
I used to think it was just terrible user experience, but it's actually a strict anti-money laundering mechanism. You can typically only withdraw back to a card up to your original deposit amount.
Yeah, the mechanics behind that rule are designed to close a very specific loophole. It stops money launderers from depositing illicit funds via a stolen card, executing a few quick trades, and then,
Withdrawing the balance as clean trading profits.
exactly, into a legitimate bank account. To stop that, brokers force the initial deposit back to the original source.
Oh, wow. So any profit above that amount has to be routed through a secondary method.
Right, like a wire transfer, which triggers an entirely new round of identity verification.
Okay, so for you listening, treat your funding plumbing with as much respect as your technical analysis. Have a primary funding method and a verified backup ready to go.
Yeah, get that secondary verification done before market volatility hits.
Right, you definitely don't want to be desperately uploading passport photos when you should be managing an open position.
Definitely not. Your funding rails are an active part of your trading edge.
Which leaves you with this to consider. If your entire trading strategy relies on reacting to split-second global news, are you secretly undermining your own edge by relying on a funding pipe tethered to traditional 9 to 5 banking hours?